In the next part of Chapter 1, we're going to learn how to determine how each transaction within a business will affect and change the accounting equation. So remember, our accounting equation still is assets equals liabilities plus owner's equity, and now we're going to be given 4 different transactions, and we have to determine if we should be adding a plus sign to indicate the account is going up, or a minus sign to indicate if it is decreasing. So here's our 4 transactions. The first one, bought supplies on account. So we know that supplies is an asset, but this is a buy now, pay later situation. We're not paying any cash. So when we buy supplies on account, we know that our assets is going to increase and our liabilities is going to increase. And why does this happen? Well, our assets has to go up because we bought some supplies, so that increased. And our liabilities, what we owe to others, also increase because now we have a debt, we have to pay somebody some money. Remember, this equal signs is our wall, so if there's a plus on one side of the wall, there has to be a plus on the other side of the wall. So that concludes the first transaction. The second transaction, received cash on or from the owner as an investment. So in this particular transaction, our cash, receiving cash, that's going to increase, and from the owner as an investment is going to affect the owner's equity. So assets are going to increase, so that is a plus. And this one side of the wall, so here's our wall, so we know it has to increase on the other, which is going to make the value of our company increase. So if the owner invested $5,000 in cash, it's recorded as an asset increasing, and then again in return the owner's equity or the value of the company is increasing. Third transaction, paid cash for insurance. So every company has to have insurance in order to operate legally. So we paid cash for that insurance. Usually we pay for a term of 6 months or a year. So it doesn't really matter at this point, but we paid cash for some type of insurance. We know that cash is an asset and also insurance is an asset. We call it prepaid insurance, if we haven't talked about that already, because we pay it in advance. Since both of these accounts are assets, it's going to be affected on the same side of the equation. So this time we are going to have a plus and a minus sign. There's a drop-down menu here, a plus and a minus sign in the assets because cash went down, so that's the decrease, but our prepaid insurance account increased. So it's a little confusing right now probably for you, but again, we're still on the same side of this wall here, so both parts of the transaction are affecting an asset, so one is increasing and one is decreasing. The fourth one, paid cash on account. So this kind of goes back to this transaction. We bought supplies on account previously, and now we want to pay some of this bill. So just like if you went out and used your credit card at Macy's and bought some shirts, you got them a month ago, but now you need to pay that bill as it comes in. So we're paying this cash on this account, or this bill that we owe. So cash is an asset, and the on account is our previous liability. So it's going to affect an asset and a liability account. So our cash is going to decrease because we're paying a debt. So we're going to put the minus there. And our liability is also going to decrease because let's say our bill was $500 and we paid $200, that debt went down. Now we're going to only owe $300. So assets decreased because of the cash, and our liabilities also decreased because we're paying that bill off. So this concludes the work together for 1-2. Go ahead and finish this problem and move on to the on your own problem.